there's 530,000 ounces, well modeled, well established, 530,000 ounces of gold and 10 million ounces of silver, an oxide deposit sitting at surface that's ready to go. We're going to deliver one in the next 45 days. It's likely going to be bigger than what the market knows now. And it's also going to not just be bigger, but it's going to sit at surface. Why go spend $5 million to $8 million making it bigger when we can do that with cash flow out of the mine? Put it in production now, get it paid back.
Hello and welcome to Crux Investor. We're here today with Andrew Bowering. He is the CEO of PRYM Mining. How are you doing?
I'm good. Yourself?
Good. Welcome to London.
Thank you very much.
So you must have been here for one-to-one, Mines and Money, all of the above, and a bit more, have you?
I came in for Mines and Money. I was in the South US prior to that.
Right. And you bouncing around London talking to other people as well?
I am. We've had 4 days so far and a couple more to go.
Fantastic. Okay. So relatively new story, which was brought to our attention a couple of months ago. I wanted to speak to you about it. So when you kick off, give us a 1 minute summary and then we'll kind of get into it.
All right. PRYM Mining came public September 3rd of this year. We're a collection of mining executives that have built many mines before, some capital markets guys that know how to fund them, and some local Mexicans that know how to operate. We've come together to build a new gold mine in western Mexico and hope to do it in the next 2 years.
Okay. So that's pretty ambitious.
Yeah.
Okay, well, let's talk about that a bit. Okay, so again, I always say to our subscribers and followers, try and understand the way that the management team thinks. So, can you describe, if you can, your business plan? What are you setting out to do? Because I did have the pleasure of hearing you do a pitch battle yesterday at Mines and Money, which you won.
Yeah.
So can you give us a bit of that?
The main asset that PRYM has is called Los Reyes, and it's a well-studied but underappreciated gold deposit.
Right.
That's had over 20 million US spent on it in 20 some odd years. It's been through PFS once. It went through PEA as a full grind, full CIL plant.
Yeah.
It's had a lot of study. It's had a lot of drilling. It's had a lot of met testing.
Why?
Well, a company had it in the 1990s. They took it all the way to PFS as an open pit heap leach. At 325 gold, it made it through PFS, but in 1999, gold hit 250 an ounce, and that's a significant drop from 325 with a big balloon payment on the property. And of course, that was a bad time post-BRIEX, so they didn't fund it, and they lost control of it.
Right. Was this a core project for them? Or?
It was a core project for them.
Okay.
I remember that stock falling from $2 down to about 10 cents when they lost this project, and it was a tough time.
Right.
Then it comes along Vista Gold. Vista picks it up, but they only get half. Another company called Grand Cru gets the other half. Right. So they stare at each other for 3 years, not doing anything. In that same amount of time, Vista Gold picked up Mount Todd in Australia, which is an 8-9 million ounce gold deposit. Tough as hell. I mean, that thing has had its broken picks of a couple mining companies already, and Vista's struggling with it. But that's hindsight now. They're focusing on Mount Todd. During that period, Grand Cru goes bankrupt. Vista picks up the rest of Los Reyes, the asset we have. And then in 2011, gold has run all the way to 1,900 US an ounce, and now they can't overlook Los Reyes. So they come in quick. They hire Tetra Tech. They spend a quick $8 million putting in some drill holes, doing a new resource calculation. They get 1 million ounces in the resource. They do a PEA on it to a grind, full CIL, gravity circuit, tailings compound. But it's about 150 million capex to build and about 30 million in sustaining costs. During that 2 year period, gold dropped $300-something an ounce. They're bleeding a lot of cash into Australia at Mount Todd. And so now they figure the best they can do is sell it to get their money back out.
Right.
The company that we got it from made a deal with them to buy it out. They made a deal for $6 million US to buy it outright with a 1% NSR, 4 payments of $1.5 million. They made the first payment in 2017, didn't have the money in 2018 to make the second payment, paid $150,000 to stretch it 6 months. That's when I entered the picture. They only had 1.8 million Canadian in the bank. They had 30 days to make $1.5 million US payment. Couldn't make it. So me, along with a couple other friends, put up $2 million, made the payment, and got control of it. And so the upshot of all that is that we have the deal with Vista. We've made $4.5 million in payments towards the $6 million. We have one more payment remaining, in October of 2021, $1.5 million, and then it's ours outright with a 1% NSR to Vista Gold.
Got it. So that's the background.
That's the background.
So give me some. I need a plan here. What are you going to do with it? What are you thinking about?
Well, the interesting thing about Los Reyes is that there's a lot of geologists out there and engineers and people that know the asset well that will tell you it could have 1.5 million to 2 million ounces. And that because only 7 kilometers of 17 known strike have been drilled off. And it's never been drilled deeper than 180 meters and blah, blah, blah. There's a lot of reasons to want to go make it bigger.
But what do you know?
I've got a bunch in my group that are miners. They want to put it into production. There's some really, it's an oxide deposit. It's got a starter pit of 3.4 grams. It's just begging to be, why go spend $5 million to $8 million making it bigger when we can do that with cash flow out of the mine? Put it in production now, get it paid back.
Right.
And
so there's the plan.
That's the plan.
You're going to not build out a resource here. You know it has potential to be big, you know, neurology and closology, etc. But you're saying right now we know we can monetize some of this going, you know, and get us going. That's the thinking?
Exactly. There's 530,000 ounces, well modeled, well established, 530,000 ounces of gold and 10 million ounces of silver, an oxide deposit sitting at surface that's ready to go. You can put that into a mine in just over 24 months, producing 65 to 70,000 ounces annually, and you can do it cheap.
Okay, so to do that, you're going to need to know, do you know everything you need to know in terms of the ore body to be able to do that? Or is there still a little bit more work to do?
We know most of it now, but we're doing our own models. We have our own mine site software. We've put all of the drill holes into that software. And we're currently modeling the deposit right now. But while we were doing that, we realized that there was never any surface geology done on this project. The guys that drilled it...
Meaning what? What does that mean?
Well, the guys that drilled it off in the 90s and then the early 2000s just drilled out from where they saw adits at surface. And so because they could see that the ore was there, or that the mineralized structures were at surface, they didn't bother to trench them, so there was no coordinated surface program. And the problem with that is that when you build a wireframe block model of your ore body, if you don't have, you can only stretch out from a known point. Resource calculation is estimation. It's not calculation. Exactly. So you put a couple points in a ore body or in a mineral structure, and then you can extrapolate out from those by certain confidence levels. My point in this is that none of the drilling was within 80 meters of surface. So you can't, even though you can stand on outcrops and know it's mineralized, you can't really block model that without a surface data point.
Right.
We're doing that right now.
Okay.
So our resource, so we're going to deliver a new resource to the market. Forget the 530,000 ounces of gold that we know is there. We're going to deliver one in the next 45 days. It's likely going to be bigger than what the market knows now. And it's also going to not just be bigger, but it's going to sit at surface. So now we're going to reduce the stripping ratios and more mineable tons, more recoverable ounces.
Oh, that's interesting. Before we move on to that, because that's kind of fascinating, you put up $1.8 million of your and your buddy's money.
Yeah.
What did you know when you did that? I mean, is this a bet for you, or why
no?
did you do it?
I've been a shareholder of Minera Alamos for 3 years. I know that they're bright guys. They were a merger with Crux. They had 3 good assets, and when we looked at the asset, we ran models on it right away because there's, like I said, there's been 20 some odd years of study. It's all public domain.
Right.
We started to run our own models and realized that there was an opportunity to make a mine out of it right now, run with a 7-year mine life, get it up and running for not a lot of money, and then use cash flows to extend it out. This is one of those things that you start it up with a 7-year plan, but 25 years later, you're still throwing rock on a pad.
I get that. So just finish off, because I always think it's interesting to see where the genesis of these things starts. So you know the Minera Alamos guys, okay? Why didn't they do this?
Well, they're busy.
On what? What are they doing?
Well, they're building Santana. So, and that's the interesting thing, because they own 17% of us. And if you got them in this room right now, they would probably tell you that 2 years down the road, we might merge to make a mid-tier.
Okay.
They're doing the same thing we are. They're just doing it a little earlier. Darren Coningen came from Argonaut. He's now there, and he's going to build Santana. They announced their mining permit about 3 months ago, and they're advancing Santana. So I'm going to suspect that a year and a half from now, Santana will be in operation, doing much the same thing as PRYM. But they just couldn't. There's no way they could get to Los Reyes in time, and they really needed to make that payment. They couldn't stretch it out anymore.
Right. Okay. So they're a year ahead of you, but there's something that you would look at in terms of understanding the way you should go about developing your asset.
Without a doubt.
Okay, so let's get into some of the numbers first of all, if I may. So you guys have put some money in. You've committed. You've made $4.5 million of payment, another $1 million, $1.5 million. And when you say end of 2021?
Yes.
Right. Okay. So what money are you going to need to take this forward for the next year?
So we're financed through this resource, new resource we're going to deliver, and through the PA that we're going to do, and we haven't even talked about that yet. But
we will.
But we are financed through to mid next year.
How did you do that? When did you do that?
We came public with a $8.7 million financing that we did in it closed August of this year.
Right. So break that down for me. How are you going to spend that?
Well, we've spent $2 million of it. We gave to Vista to make that $1.5 million payment. We talked about how I put up the $2 million privately back in March and April. I put up $1 million of it, and two other gents put up $500,000 each. So we paid them back out of that financing too. They're arm's length from the company, and I thought it was a good idea to pay them back, and so did my board.
Pay yourself back?
No, I still hold the note with the company, and because I'm non-arm's length, I'm a big shareholder, and I just thought it was better for the company that we not do it at the time. So
what else are you spending that money on?
And then we had to buy some equipment for down there, so a couple of trucks, a couple of quads to work on the property, modeling software, and then striking a deal with the local Ejido, cleaning up the roads, getting back in.
What's an Ejido?
The Ejido's the local communal group that has the surface access rights, and much like First Nations in Canada and in the U.S. And so you have to have a deal with them to be able to access the ground for exploration, and you have to have a deal with them to be able to profit from it, to exploit it, to mine it. Our deal with them was very simple. They wanted a cash payment, then they wanted us to help them clean up some roads, and they wanted us to haul some water during the dry season. So for us, the first time we went into the property, the 35-kilometer distance from Kosala into the site took 4 hours. Now you can imagine that that's not going to work well for our crews either. Like if it's a 4-hour drive in and a 4-hour drive out, you're only going to, in a 12-hour workday, you're only getting 4 hours of work on the ground, and that's not efficient for my company. So it made sense for us to clean up the roads too. So we cleaned up the roads. Now the drive in is 1 hour and 20 minutes.
Nice.
Now we get 3 hours of drive time and 8 or 9 hours of work. Much better for us. Great for the members of the Ejido because their communities are all on that road. So they had the same troubles too. There's 2 dry months a year. In the summertime, we're going to be hauling water for the mine anyway during those 2 months. And so we'll happily haul them water. That's not much of an expense to us either. The annual cash payments to the Ejido have been set the same for the last 10 or 15 years, and they were $7,500 annually. That's it. We settled with them to give them $10,000 a month, or sorry, $10,000 a year, 10% rate of inflation increase every year, and then we agreed to double that payment when we hit production.
Okay.
So it's a very minimal cost, but it keeps everybody happy. And there was a couple other members of the Ejido that had little concerns. There's a corn farmer that has a small patch of corn. I don't think he makes much money doing it. We just said, hey, you know what? If we put a road right through there, we'll pay you happily for your corn for the rest of your life.
Right, okay.
Come and work with us.
So, but that must be a big thing, employing a lot of the people in their area as well. Must be important for them.
It is. We've got 4 crews, each run by 1 geologist, doing some surface work right now on there, and each crew has 4 guys with shovels digging and 3 sampling guys, and so there's 28 guys in there that didn't have a job before that are
Right.
that are working, and that's all part of it. And it's it's
So
got to work
this-
for everybody.
You work for everyone. So how does that relationship work? You must have a guy at the top of this, or is it a committee, how does it work?
Well, we have a local country manager that helps resolve all of the local
Right.
association things that we need to deal with. And we have a couple other guys. Like we have an engineering firm, an environmental engineering firm in Mazatlan that's working on the permitting. We have an operations manager and an assistant in Kosala that work on all of our procurement and our expediting and coordinating of all our samples coming in and coming out. The first thing people think about when you're in Sinaloa is, the Sinaloa cartel. This is going to be interesting. We're in the southern part of Sinaloa. We're about 4 hours away from Mazatlan, the beautiful resort town that everybody goes to. But we're 30 kilometers away from Kosala.
Right.
Kosala is a 9,500 population town that's defined by the Mexican government as a Pueblo Mágico. And that means it's a beautiful place to go look at the Mexican way of living and the architecture. And it's an absolute beautiful town. It's wonderful. We're personal friends with the mayor, and it's a great spot. More importantly, there is no cannabis or no poppy growing around our region, and there are no cartel corridors.
Yeah.
We're in a safe place. There are several other big mining companies that operate around the region.
Yeah, absolutely.
And it's a pretty comfortable spot to work. And so mining friendly region for sure. You've got Chesapeake Gold within 90 kilometers. American Silver operates there.
Yep.
McEwen Mining is in the region.
Yeah, some big players around there, but we need to discuss it because people look at that and go, oh boy.
Yeah.
But the reality is it's very, very well-known mining area.
Yeah, and then you got to look at this team. Like, this team's built 7 mines in Mexico.
We will. I want to finish off the money first. So you kind of broken down how you're going to spend that money. What does that get you? It takes you out of 12, 18 months, I'm guessing.
Yeah, the money should last us till about next summer.
Okay.
Because we've got some of it budgeted for a little bit of drilling, we've got some of it budgeted for surface work, and then we've got a bunch of it budgeted for geology and engineering.
Right.
And we currently have about $4 million in the bank. So our whole management team that takes salaries swapped out their first year salary into equity at the company at 30 cents a share.
Okay. Very good.
I don't take a salary. I don't accrue a salary. And so we don't have this big salary burn. So most of the money we have goes towards advancing the project.
I like
and
that.
we might spend a little bit of money on marketing just to keep liquidity up and keep shareholders happy. But
informed. Okay. No,
Yeah.
I like that.
And
That's unusual. Okay.
And outside of that, it pretty well all goes into the ground and into the engineering of it.
Okay. So next summer, what are you sitting at? What are you sitting with that you can use to have conversations with people about? Like, say, if you do another raise, you're going to say, here's what we know now, which we didn't know then. What's it look like?
Well, by then we have we have our surface access rights from the local ejido, and we can talk more about that. We have the new resource calculation that comes out,
right.
and I don't know. I mean, I'm going to project that it's going to be around 700,000 ounces. It may be more. We'll see. It's about 45 days away now. Then we will have our permitting well underway. We start our permitting in December, so we're a week away from starting permitting.
So that's a regular process in Mexico, well-trodden path. So how long does that take?
It takes anywhere from 12 to 14 months typically. Right. Great examples of it are Silvercrest. Silvercrest announced their PEA in May of this year and their mine permit in July. Our 17% shareholder, Minera Alamos, took 14 months to permit Santana and announced that 3 months ago. So about a 12 to 14 month process.
Okay. There's a regular mining law, reasonable jurisdiction to do business then.
It's one of the easiest places around to mine. You don't need a mining plan to get a mining permit. What you need to know is your land uses, how many hectares you're going to disturb, what you're going to disturb them doing, what chemicals you're using on them, and that's pretty well it. And then they determine a tax structure based on that.
Okay.
So we're also going to have the PEA by that time next year. So we are going to do a PEA to PFS levels. So the only reason that we'll call it a PEA is because we're going to include a little bit of the inferred resource in it. But we will get 2 contractor quotes for every piece of equipment, minimum 2 bids on every process that we plan to employ. And we'll have it very detailed out and scoped out.
Right. When I was in banking, I wouldn't finance on a PEA. You think that can be? I know you're doing it to POS level, but if it's a PEA, are people going to finance that?
We think so. We've already had a couple of Mexican banks approach us, and keep in mind that this is only going to be about a $14 million capex build.
Okay.
We're not coming and looking for the 180 or 200 million that you would need to build a full CIL grind gravity.
Oh, interesting. So tell us about what do you get for $14 million?
Well, you get a open pit heap leach, and it's really simple. We're going to employ Mexican contractors or Spanish. One of the companies that contracts in the region is Peel. They're a Spanish company, but they're contract miners. So we won't buy our own rolling stock. We'll employ them to mine it,
right,
crush it,
yeah,
and deliver it to us. Then we will agglomerate it using cement and a cyanide spray, stack it on our leach pad, and run our own carbon recovery circuit. Then we will ship pregnant carbon out of country to have it stripped, or we'll sell the carbon as an offtake.
Okay.
We don't plan on putting in an ADR plant. That saves several $1 million. It also eliminates that security risk of pouring doré in quiet parts of the country, and saves that multi-millions of dollars. So you don't need a lot of capital to do what we're planning on doing. We're not going to pour a lot of concrete.
Right.
It's a very simple procedure.
Okay, so obviously gold's done what it's done in the latter half of this year. It was great for people who are producing. If you're going to get into production relatively quickly, gold price holds, that's great. Have you got any sense of what you're going to be able to produce at? I know you haven't done the numbers, but you know where you're going to be. I know, and you probably haven't made an announcement to the market yet, but can you give a sense of where you're at?
We can. We would like to get the number under 600. Are we going to? I don't know that for sure. But we've modeled it 3 different ways now, and it's under $650 to produce a gold in the carbon.
Right.
Then there's a cost to stripping the gold in the carbon.
Right. So we're okay. So I know you can't get into it yet, but that's pretty low.
This is probably twice the average grade of an open pit heap leach in Mexico. This is a 1.7 gram oxide deposit that's at surface. It's probably 3 times the average operating grade of heap leaches in Nevada.
Right.
And it pays back fast. It spits out a lot of cash.
Well, tell us about that. You're going to spend $14 million at some point in the future. We know what you spent to date. What is the kind of payback that you're thinking about here? Again, don't want to push you, but give us an idea.
We've run several different models. We've run models from as low as a $14 million capex with a single stage crush, no agglomeration, or single agglomeration, and no ADR plant, just having carbon stripped in Idaho, all the way up to a 3-stage crush, some of our own rolling stock, and running an ADR plant and pouring our own doré on site, and that was about a $35 million capex.
Right.
We think that the risk profile is best served, or shareholders are best served, by keeping it very simple and build a Ford truck, not a Cadillac, if you pardon the expression.
Sure.
But and so pretty confident it's going to come in all in under $700 an ounce cash costs.
Interesting. That's very interesting in this market. Very interesting. So it will throw off a lot of net cash for you.
We modeled it at $1,250 gold because that's what we bought it at.
Right. And obviously we got to, this is potentially a couple of years out, so we need to, have that in mind when we're talking here, right? Okay. So you're talking about the starter pit still there, or are you talking about the life of the resource that you know about at the moment?
The life of the resource. So our best guess is that at the end of the day, it's about a 1.6 gram deposit.
Right.
And the head grade, by the time we're all said and done, because you're going to have a little bit of dilution, our head grade might be 1.4 grams.
Okay.
that reaches the leach pad. Life of mine as we know it now. But there is a 3.4 gram starter pit.
That's what I'm talking about. I want to say that's going to impact the economics real quick for you. So can we get back into that?
Yeah.
So you're spending $14 million.
So there's a deposit that sits at surface called San Miguel. It's the closest to the planned haul road to where to where the leach pad's going to be and the operations will be. It's 500,000 tons of 3.4 gram oxide sitting at surface. It's open along strike in two directions. It's open at depth. We think that there's a little bit up on top too because of the lack of surface trenching, and that pays back capital in less than 6 months. It's that fast.
That is fast, and then it's a case of accruing cash to be able to what end to then get into the rest of the resource and get into exploration. And again, let's move on and talk about what's next in the plan. How are you going to deliver it? Who's doing it?
Okay. Yeah, you got to look at our team. Our team's a very successful team.
Yes, please.
The executive chair of the company is Dan Coons. Dan has had a storied career. He was CEO of Ivanhoe Mines. He was CEO of MK Gold. He runs a mine engineering firm out of Boise, Idaho. He's a mining engineer and an accountant. And
is he active?
Yeah, Dan spent 3 weeks out of the last 2 months on site.
Okay.
Dan's extremely active. His engineering firm is busy in Idaho daily on this project. And the other significant thing
and has he put cash in?
And Dan has put cash in.
Right,
Dan's a significant shareholder of the company. Okay. All of our board put equity into the last financing round at 30 cents a share. In fact, our insider group controls about 45 to 50% of the company and has about $8 million tied up in the company.
Oh wow!
All at the current market price.
Okay, again, that's impressive.
Yeah.
Right, and the obviously people are going to be trying to hold on to that. That may cause liquidity issues in the future, but I guess. How do you deal with that? Because there's another thing which always fascinates me when you've got large swathes of a company controlled by a few insiders. You concerned about that, or do you think with next raise dilution it'll even itself out?
I don't know. You know, our market doesn't trade a lot of volume right now because we have tight control over it, and the last financing round that was done too is still under a hold period until the end of December. So,
but you know what I mean? It's a good thing and a bad thing, right?
It is, but us having a vested interest in it, I mean, some of these guys swap their salary out for equity. Like they're believers.
Nice, yeah. We've interviewed quite a few South American stories with Canadian guys who've done similar sorts of things. But as you grow, you're gonna have different sorts of problems, right?
Yeah.
Okay.
I wanted to continue on about Dan. The other thing about Dan Coons that's significant here is that Dan is a founding director of Chesapeake Gold, and Chesapeake Gold has a market cap of about 600 million. It had a market cap of 2 billion in 2011.
Remember.
And it has a deposit called Metates that's about 90 kilometers away from Los Reyes. And I don't know when it goes into production. You know, it's got 20 million ounces of gold, but they need 5 billion to build it. That's a big number. Yes. But the significance is that Dan has been in the region for 15 years. He's very connected, and that's invaluable for us for what we're planning on doing in that part of the world.
Has been valuable, will be valuable.
Absolutely.
He's active.
Got us engaged with the mayor of Kosala 2 days after going public.
Right.
He was able to get 70 members of the local ejido in a room for us 2 days after that, all voting in favor of giving us instant surface access rights. So
amazing. Who else you got?
Got Greg Liller. Greg Liller's our COO, fluent Spanish-speaking American geologist, lives in Tucson. Greg's built 4 mines in Mexico. He's been, Ocampo was there from the first discovery hole all the way through the 12,000 tons a day open pit and the 2,400 tons a day underground. Greg was part of the team that built Uvio de Oro, Magistral, and El Cubo.
Right.
Spends 2 weeks of every month on site. In fact, I don't think Greg's taken a day off in the last 4 months. He was complaining about that the other day.
Complaining?
Us guys that have been around a little while.
Wants to see his family or something.
Yeah,
right?
I don't know. The guys that have been around a while, we like to work, and we like to work. We like to work every day. We don't want to stop, but we like to complain about it too.
Yeah, quite right. So you got a strong team there. A team with a track record of building mines, building companies and returning shareholder value. I like that.
Yeah.
You put a lot of your own money in, 45% of the company held by insiders. So that's meaningful. And you take, a lot of you, I think all of you, take in salaries and shares. That's really strong. It says a lot to me about what you believe you got here. Yes. And you're, like I say, you've done it before, you know what you're getting into. So what do you think the things what are the things you're worried about? Like, what are things that could go wrong here for you? Can't all be good.
We've thought about this a few times, and maybe permitting takes a little longer than we planned, but we look at other companies and see that it's not really.
Yeah.
I mean, maybe you get a government change and maybe things slow down a little bit, but we haven't seen that yet.
Right.
We know that there's been enough met work done on it. We know that the gold recovers at 76% by about 90 days into the cycle and slows down after that. We know the silver's low recovery, but we're not that concerned about that. We've seen 2 or 3 models on it already. We're really not that concerned about much. We're quite confident that we're going to be able to put this into production. Our only, I guess what keeps me up at night thinking about it is how strong are the capital markets and at what price and how much dilution am I going to have to pay to get it into production.
So it's just a cost of money question, but
That's
same
all.
as everyone else is going to go
all.
through. Okay, but you're ways off from having to worry about that. The one thing I'm not quite sure I've heard, and I'd like you to expand on, is scale. We get you're going to get into production quickly. You're going to go after the high grade stuff, and you've kind of got a resource, but it's not a huge resource. Some clues there about some people around you who may want to, the Los Alamos guys,
Minera Alamos.
Minera Alamos, get that the right way around. Yeah. People like that can come and have a conversation with you, but you want to have that conversation when you've kind of got a bit more going on, right?
Sure.
So where's the scale come from?
Well, a few different places. So let's get the operation into production as a heap leach. Mm-hmm. Let's get it paid back, and then let's start giving some money back to shareholders.
Right.
So they stay engaged, they're excited.
Yeah.
Small dividends would be great. And then let's put a little bit of that money into more development. And so typically in these epithermal systems like this one, you have higher grade chutes and lower grade chutes.
Right.
We know of one spot on the property called Mariposa that has 75,000 ounces at 7 grams. It's a little bit of a steep area to open pit, but would make for a great underground operation, and it's wide open. Mm-hmm. So once the leach pad's up and paid back and people are happy and we're moving forward, now we bring in a 500 ton a day ball mill. We put a gravity circuit on the back of it, and now we process the high grade chutes through that mill.
Okay.
Capture some gold and silver off the gravity, agglomerate the pulp from the mill, and throw it on the leach pad. Still no CIL plant, no vat leach, no tailings compound, no changing the environmental footprint.
Right.
But now we're covering more ounces.
Okay, interesting.
Now maybe you go from 65, 70,000 to 75, 80,000 ounces or 85,000 ounces with that little addition that you've done out of cash flow.
Yeah.
Same time that because you don't forget you've got your geos on site because they've been doing all the modeling, all the work so far. Now with that cash flow, you put your geos back to work, and now you go after those 10 kilometers of undrilled strike. You go to sections on our property that have amazing outcrops that have never had a drill hole in them. You start surface drilling off those, and then you plug some deep holes in to look for the big epithermal carrot underneath or stacked zones. And now you go after that 1.5 million to 2 million ounces that people think is there, but you're doing it with cash flow.
Interesting.
So
interesting.
And that's how we do it organically. Then outside that, we go back to the guys we bought it from. Now they've got their mine up in operation. They're doing 75,000 ounces or 85,000 ounces annually. And we say, hey, what does this look like if we come together? We're at 175,000 ounces. We're a mid-tier. People care now. We get a re-rate for that. So we come together.
That would be interesting. If you're making money, if you're mining economically, people would pay attention for sure. Well, that's a ways off. Look, thanks very much for introducing that story to us. That's a new one. I heard you yesterday. I can see why you won that pitch battle. You ticked a lot of the boxes for us that we would look for, and suggest to people that they should look for too when investing. And as a news story, I think people should have a look at you.
Excellent.
Well, thanks very much for your time.
Thank you.
Appreciate it. And good luck with the rest of the conversations you're having in London this week.
Thanks very much, Matt. Thank
Brilliant.
you.
Thanks very much for watching. We hope you enjoyed that. And if you did, please click the button in the corner of the screen to subscribe to our YouTube channel. You can also catch us on our website, cruxinvestor.com, and Cruxcast, our podcast series. Plus, most days you can catch us on LinkedIn and Twitter. We'd love getting your feedback, so please keep that coming, and we'll speak to you again soon.